There is a perception by many in the developing world that financial services are the preserve of the literate, hence the reluctance of the poor to do business with banks or financial institutions, including insurance companies and stock markets. The World Bank estimates that about 2.5 billion of the world's poor do not have a bank account. Interestingly, these people who are referred to as unbanked or people without access to formal banking services often rely on moneylenders who usually charge high fees. In Ghana, reference can be made to the R5 scam that hit the headlines in the 1990s. Not only were monies lost, but lives were lost as well. Today, there are hundreds of non-banking financial services springing up in the country which have no license but are operating under the guise of lending money to the poor but at very high rates. These developments are not peculiar to Ghana, and surveys done by the World Bank in 2011 in 148 countries, which covered 150,000 people, indicates that 75% of adults earning less than $2 a day did not use formal financial institutions. Women dominate the informal sector, but they are disadvantaged when it comes to access to financial services. Only 37% of women in developing countries have bank accounts, whereas 46% of men do. The gap is even bigger among those living on less than $1 a day. Of those who have a bank account, only 43% of adults use their bank accounts to save. Yet, 61% of account holders use their accounts to receive payments from an employer, government, or family members living elsewhere. The bank's president, Robert Zellick, thinks the way to go is for governments in developing countries, including sub-Saharan Africa, to harness the power of financial services. Kenya, he says, is a shining example because of the use of M-Pesa, which is a mobile banking service. Ghana is also not bad at all in this respect. Reference can be made to the eSwitch and the MTN mobile money, Tigo and Airtel. But on the insurance front, only 6% of the 2.5 billion people in the poverty bracket have access to insurance policies against crop, rainfall or livestock. The inclusion of the 3/4 of the world's poor, according to the World Bank, will allow them build a more secure future. This is because the ability to save and borrow money will go a long way in helping them to build their assets, start businesses, invest in education, establish a credit rating, and eventually own a home.